All right, good morning, everybody. Good morning, good afternoon, depending on where you are. This is Trendy John from Simpler Trading. Hope everyone is doing great. We are getting ready to have a holiday, just so everybody knows that. We are not going to be trading tomorrow. A couple things before we start our broad market analysis. One, make sure you come out here and give me a follow. Make sure you're also following me and not some sort of furu or somebody that is pretending to be me. And I just want to point out a few things here. So, very important. A or at Trendy John, TR3NDYJON. Pay attention to this because a lot of people out there right now have several imposters, so just make sure. I'm never ever going to reach out to you and ask for money through Messenger or even ask you to do anything. But you're more than welcome to send me a message if you guys ever have any questions or anything like that. Okay. Again, right now I'm following 42 people, 10.2 thousand followers. This is me. Okay. Second thing is, before we get started with this, go ahead and hit the like and please subscribe to my YouTube channel. That's very important as well because this Sunday video is free. It's not something that somebody asked me to do. It's something that I've been doing for many, many years. And I really appreciate your support and any kind of feedback that you might want to give me. Like, hey, John, we don't really care about looking at this. Would you mind maybe adding this instead? Again, I will review that. And if it's something I feel like I should add into it, I'll be happy to. The next thing is I will be in Vegas. I'll be flying out Tuesday afternoon. We'll be there for the money show. I will be presenting on Friday the 24th. I believe the time is like 11:15 there in the afternoon. It'll just be a 45-minute talk around supply and demand. So I hope to see you there. If not, that's okay too. And then second, if you guys ever want to come into the room here at Simpler Trading, they have some amazing deals going on. And they also have like a President's Day sale that's also going on if you're interested in anything we provide. I can tell you that the overall trial is very inexpensive. You get to hang out with us and see our API alerts. You get to see and hear from myself and Melissa every single day. We trade futures, we trade equity, we trade options. I mean, you name it. Basically, it's a one stop shop, but our focus is education. I am a professional supply and demand trader. I have a lot of background in supply and demand. I basically came up with an easier way to approach supply and demand. And I like to teach everybody that. All right. So let's go ahead and get started here. The first thing we're going to do is I'm going to bring the room down from Simpler Trading right here. And this is where I update this broad market analysis. So if you are a member here, you all should know this, but I know that we get a lot of new members all the time. So again, this broad market analysis is going to pop up here. I've already updated it. So if you need to come in here and take a look at the charts and get some levels and so forth, then you can just come here. The first thing we are going to look at is going to be the econ data that may be coming to the market this week. And please understand, this is just stuff that you need to be aware of, right? And the reason why we're aware of it, because any of these catalysts could create volatility in the market. All right. And so we need to be aware of those, but understand we are already identifying the levels that are important to us going into this short week. All right. So this is a news catalyst that pushes price into the levels we are going to talk about. And then we teach how you execute those levels using methodology. All right. So Monday, notice again, it is President Day holiday. There's nothing going on. Tuesday, US leading economic indicators, not much going on there either. Wednesday, we have some Fed heads speaking, and then we also have the minutes coming in for the FOMC. Now, this is Eastern time. Thursday, February the 22nd, initial jobless claims, S&P Flash PMI, existing home sales. Then we have some more Feds talking later on Thursday afternoon. And then Friday, none scheduled at the moment. So honestly, I feel like this is just something that I have noticed is when the market does not have a lot of econ data going on, it's typically like a chop and digestion week. And most of the time, in my experience, it's sideways to down. So be interesting once we get to some charts here. And again, that's just something that I'm seeing at the moment. As we scroll down here, all you guys know, I definitely highly recommend not only to follow Earning Whispers out there on X, they have amazing data that you can use. And I've always trusted them and used this calendar to help me know who else is going to report on their earnings. And so when I'm looking at this, you'll notice that I've underlined some names. And typically, these are names that I'm interested in either buying debit spreads on going into earnings using supply and demand. So again, I love teaching that as well. What we look for is a low risk trade with a nice probability of winning one of those sides and looking for that side to take care of both of the put and or call debits. If you've never seen me do that, you can go out on my YouTube page and you guys will see some of my analysis going into earnings, and I talk about how I use supply and demand into these. Now, the names that I've underlined are just personal names that I would be interested in trading if I chose to trade those. Tuesday, Walmart. Then you have Palo Alto, PANW. Home Depot really has been doing really well this year. Here's SEDG, SEDG, Solar Edge, and then Teladoc. I'm always interested in how Teladoc's doing. This is just like a personal thing for me. I think there's a lot of value here in Teladoc. Now, as far as their fundamentals, I can't tell you. I've not looked at them, but I'm just interested in the name. Okay. Down here, Toll Brothers, always interested in what the housing market's looking like as well. Then we have the big name coming in on NVIDIA, and I'll probably go more into depth on just a video, all right, that I will send out on X and on my YouTube tonight. Just will be like a fun video to kind of cover where I believe prices are going to head into and what the outlook is going into the next several weeks. Then we have Rivian. Of course, all you know, if you're following me, that I have a Tesla position for the long term. And anytime we have someone in this sector that's going to be reporting, I want to know what's happening there. Etsy also have that underlying the Lucid. And then coming in on Thursday, we have Moderna, Square, Carvana, and then moving on down here, BKNG. Always love to see what's going on there. Wayfair, FVRR, and then again, Intuit. Okay, these are the names that I'm paying attention to. You may have some names out here that you're interested in. Now, the next thing that I want to go over is the neutral strategy from last week. We always like to post these. These are the same levels I gave you last week, and then we want to see what the results were. So let's go ahead and take a look here, and I want to talk through it. So SPY, obviously, guys, we're up like 14 weeks, 1 week being down, and you're starting to get to nosebleed section, like I talked about last week. And sure, it did bid over the 502, but as you can see, it didn't last very long. We quickly got what we call a trendy turn signal came in, and then you did get the short trigger. So two possibilities here. You try to take the long here, you get stopped out. But man, if you took the short, guess what happened? Price broke down. It hit target one, target two, and target three. And what's most important about this level, when we zoom in here, I gave you these green zones last week. And again, this is SPY over here on the left. We came right into that demand zone. All right. So again, the overall neutral strategy is based on supply and demand, Fibonacci's, Fibonacci extensions if we're headed into all-time highs, and then the cloud, everything you see on the chart. And it actually takes a little bit more time than you would imagine to put this blueprint together for you guys. But you can see that it works really, really well. But most importantly, because I took the time out to show you the demand zone last week, this is where it's important, right? That's where my professional analysis comes in. So everything between there is just a blueprint, but these are the major levels. And I show you guys that on the ES futures and the NASDAQ every single morning. This is where I believe buyers would step in. I talked about it last week, and that's exactly where buyers stepped in. All right, this is what we expect during demand zones. Now, one thing I want to point out in this demand zone is you'll notice my indicator. My trendy edges are color coordinated for several different time frames. Basically, the way that we teach on these is that it is a playing field of demand and supply. And the reason why we say playing field is because we don't really care at this stage to be exact. All right. I just want to understand the level where I'm expecting buyers to come in and or sellers when it comes to supply zones. All right. So, but you'll notice that the trendy edge worked very well and the overall zone worked very well as we pushed up all the way to the upside, but not taking out the high. So, what we're coming into this coming week, and I'll give you new levels here in a minute, is that we are creating lower highs and obviously we have higher lows. This tells me right away to expect sideways to chop. Notice over here on the QQQ, you never got the trigger to go long. You actually got the trigger to go short. You hit T1, T2, and then T3, and same thing. We had what we call a double stack. You have two different color trendy edges down here. And when we have a double stack, we like that synergy, and it just tells us to have a little bit more conviction that buyers are going to step in there. And as you can see, the entire zone itself worked as well. Let's go ahead and move down into this week's numbers. Okay. So this week's numbers, and again, this is where you would come back and freeze the screen. And if you want to use my levels, you're more than welcome to go ahead and place those on your chart. Okay. So again, if you do not know how to trade the neutral strategy, I have a video right here on YouTube that you can watch. It's very short and to the point. So take the time there and watch that. And if you have questions on that video, please ask. You're more than welcome to reach out to me here on X or YouTube, any of those forums, okay? Notice here as we zoom in, these are my levels to the upside, these are my levels to the downside. Overall trend is extremely bullish, but Friday was extremely bearish, and I think we all know that, right? Same thing. Again, I want to point out we have lower highs, but we are creating higher lows. This means that we're basically looking for a sideways trend going into this week and especially into a 4-day week. 4-day weeks always seem to be just a mess, if you ask me. So, those traders who like to sell iron condors, that might be something that you're looking for. Now, notice on this that I also created demand zones this week as well. They are lower than the previous week. All right, and we can go over that here in a second. Matter of fact, while we're sitting here, let's go ahead and look at the actual Thinkorswim chart. Okay, so if you want the levels, and again, we just want kind of like a playing field. You don't have to be perfect here. We have some trendy edges down here on the downside. And on these levels, again, come about right here and right there. So that on the SPY looks like 485 to 478, and over here on the QQQ, 417 to 412. So if we get some sort of bigger dump, if you will, then be looking for buyers to step in into these zones. Now there's several things that we do. We can be aggressive in this zone, not look for any kind of indicators telling me to go long. Just take the trade and understand you're looking for buyers there. Okay. The second thing is that you can be conservative, all right? And just when and if prices trigger to the downside here, remember, you're always being a good conservative of your money, right? Or I should say a good steward of your money. And when we get to these prices, you're covering those shorts, but you're also bringing your stops in. So trim some, keep some kind of idea here, all right, to the downside. And if we start to bid to the upside, what's important about this week is that on this SPY at or around this level, and again, it doesn't have to be perfect, we have supply that's already building here. And I'll be showing you that once we get into the futures towards the end of this analysis. Again, very important for you to understand that. So again, we're building some supply here. So this is where I expect sellers. And where I'm wrong is if the market takes out a new pivot high. So again, best way to identify trend, I want you to identify current price. And to the upside, I want you to find the most recent pivot, which in this case would be right here. And you want to go back 2 pivots. Okay. And in this case, you could call this a pivot. Okay. You could call this a pivot. You have, again, higher lows, lower highs, sideways trend. This is how we find our trend. Okay. And again, if the bulls want to make a statement, they're going to have to make a new higher high. So tonight's analysis
looking at the market, I expect chop, and where I'm wrong is if we create a base over this pivot high. Then we have a high probability that the market continues on this bullish trend on the higher time frames, and we continue to march up towards 505 on the SPY. If for some reason we break down below the neutral, we have several areas where we could find buyers. I want to make sure that I show you those. You guys can see that we have some inside and up formations here. I would expect buyers somewhere between this 495 and 493. And if that lower pivot right here, that higher low gets taken out, high probability we start making our way down here towards 488 and 485. Over here on the QQQ side, nothing different here, okay? The only thing that I really want to point out right here, and I'll show you again on the future side, is that the QQQ is your canary in the coal mine, right? So it's showing you already there's a big difference between the SPY and the Qs here. Well, we know that the Qs lead, and what I mean is they move faster, okay? And they're typically in the lead, if you will, and they kind of give you some insight on what the SPY might do. So if we zoom in here, notice that the SPY is right at the bottom of the cloud. So it's basically on a ledge, right? It's on that ledge. And if we can't open up here and relief bounce, then we'll expect that acceleration down towards that bottom 495 level. But the big difference right here is that your Qs have actually already broke below the cloud. Okay. And notice that your EMAs are now pointing down. This is not a great sign, but if it finds a little bit of love right here, again, a relief bounce can come in, but it's not anything significant. Like, I'm not saying you can't make money off of this bounce, that's obvious. But what I mean is you're going to have to get up and over this pivot to really make a statement this week on the bull side. We have a little bit of supply here. And again, I'll show you that on the NASDAQ a little bit later during this analysis. Okay. So again, you can copy these levels if you like. These are going to be the new neutral levels going into this week. And let's go ahead and move on to our next portion of this analysis. Okay. So let's pull this up. So the next thing we're going to be looking at is the SPY bigger picture. Now, I also send these out on X, or formerly known as Twitter. And if you want to see those, you can go out there as well. We're going to come over here and let's click right here. So this is going to be your quarterly. Now, I sent this out and said, listen, there's not a whole lot of update from this past week. So new highs were established and a slight pullback. The first extension will still serve as support, and that's your 496 level. So if you look over here, we said last week that this level here at 496 and a half was going to be your support. And if you notice, we closed here at 499. And I think we had some sell off after market close around 498, about another dollar to the downside. But just understand these notes from last week are still current. So again, these are going to continue to be your support levels that I gave you. So please read those and go back over those. And far as this week, again, we have 1 month and 11 days until the quarterly closes. As of right now, this is just a continuation candle. And after the big run up, there are a couple more signs that say, hey, we could consolidate here for a bit and kind of let the higher time frame EMAs catch up with price. And I'll show you that a little bit later as well. Let's go ahead and move over to QQQ. And we are going to be looking at this on a quarterly as well. Now, this one has a little bit more notes, but again, I want you to pay attention to the previous notes just to see how well we are coaching through this entire move. On 218, that's today, a new high was made on Monday, and Tuesday, price came into a demand zone. All right, that's all. It just came into a demand zone, and then bulls were unable to fill the gap to the upside. You'll see that on smaller time frames. Keep your eyes on the all-time highs or that pivot that we just discussed. Okay, most likely we see lower highs for the next few weeks. I expect chop between 436 and 417. Okay, 436 and 417. Also see the support in the previous notes, and I talk about them right here, guys. So last week, the continuation continued 1 month and 18 days left before the candle closes. Near term support was 432 by 422. And you can see we closed here at 430. Okay, so we're just right in between those two numbers of 432 and 422. Mid support 415 to 400 and long term 378. Okay, your targets were 440 to 447. Looks like we reached up here right around 438 and a half, so didn't quite get to that 440, but that was okay. We all know that we were pretty extended up here on the Qs. Okay. Next thing that I want to talk about is the dollar. And again, you guys know all this stuff is very important to coming up with all of this analysis. We do not do this on a quarterly time frame. We do this from a weekly standpoint. And the notes did not change here, but I want you to know that it's still really, really important. Price did come into the demand zone that we found before price even got there. It came into a supply zone that we found before price got there. We knew exactly what to do here. Price came here, and in October, the ES and NASDAQ and all that fun jazz came into demand zone. So we're expecting a market rally. The market has rallied the entire time. And even from here, when the dollar found a few bids here, I think traders could see that we still had room here before the dollar could hit resistance and pull back. And so the market has continued to climb, not as aggressively as it was. And now it's starting to slow down. And if you remember, the notes that I had here on the dollar said to be cautious right here at the 618. And that's exactly where we are. Notice on my candles that we are getting red to white. Okay. Now, when we go from red to white, the momentum is changing. Notice that you're above the cloud now. Okay. Are these EMAs starting to swoop up and giving us support in the dollar? The 618 is the golden Fibonacci from the levels that I measured. And basically, what this says, I'm just going to reiterate the same thing I told you last week. If we can close above the 618, this downtrend is broken and the dollar is now regaining the uptrend. Okay? So please keep that in mind. Again, not great things happen in the overall market when the dollar is bidding above the 618. So you can go ahead and add an alert there. And again, this lets you know that there should be some caution in the market. Okay? Next thing I'm going to show you is the TNX. Let's go ahead and talk about that. This is going to be the 10-year treasury. And as I said a long time ago, for the first quarter, I expect the TNX to stay between the inside and up and inside and down formation. Well, we have 1 month and 11 days to go, and I've been saying this before the new year, and that's exactly what's happening. But please understand, just like the dollar, we're showing some momentum here. Okay, we're now above the cloud. We are now above the entry line of the supply zone. And as long as we're above the cloud and as long as we're above 4.2, then you should just be cautious. Okay, both of these are telling me pump your brakes a little bit. And especially after these certain names in the market have created a lot of FOMO out there, it's a perfect. If I were in charge of the market, what I would do is show you a little bit of possible potential bounce here into this week to get you thinking, just like you have been thinking for the last several weeks, around, hey, this stock could move like SMCI, like NVIDIA. Hey, this stock can move outside of its normal ATR and catch you off your guard, sell you that premium so that I suck the premium out of your position and keep that for myself and basically build liquidity for later on for the impatient traders. A lot of stuff is pointing towards chop consolidation. Let's really wear out traders who think that we will continue these kind of big moves in the market. And I know if I'm selling you options that I can increase the premium and bet on you to buy that premium from me and then kill it. Your positions die, but I can make money from selling you credit. That's what I would do in these areas. Now, will that absolutely come true? I say the probabilities are pretty high, but again, it's because of what I'm looking at here going into this week. Okay. All right. So that's the TNX. Please be careful, as I said, above the cloud and above this level. Does not mean that we cannot buy a relief bounce, but it's definitely something I want you to take note of. Let's go into the SKEW, and it's as if there's a crystal ball here, and all of you can do this. That's the beauty of supply and demand and using the right levels. I've been telling you this. I said that the SPY, the QQQ, no matter what, if you were to add that into this chart, you will see that when the SKEW reaches these extreme levels, and it's not hard to do, all you have to do is back this chart up. All you have to do is add if you'd like to. If you wanted to add the SPY on here, you could in the background. If anybody does not know how to do that, let me take a look real quick. And we can add into, and I know you could do this on Thinkorswim too, you can easily add the SPY in the background. And what you'll see is that when the SKEW is at these levels, the SPY ends up dropping. All right, timing is the variable, and I keep talking about that. Now, my calculations are right, and they have been right for almost a year now. If my calculations are right, then we still have some room to the downside, but we're also looking at the SKEW and at the charts. We are at a level where we closed on Friday for a potential relief bounce. And again, relief bounce simply means that we cannot get over those pivots that I'm talking about. If we don't get over those pivots and the SKEW continues to drop, that means that the market is dropping, okay? And that people are getting more fearful, and people are starting, participants, I should say, are starting to buy more on the put side. Now, this has been true for a very long time. This level right here on the protect risk off, okay, has actually turned more of a risk on, all right? So when we have met this level, and a lot like 2020 back here, or 21, we stayed in this very high level area. And this year, and a lot of last year, anytime we came back here, this was a time to buy in the market. I will say this is true until it's wrong, and it has been true for a very long time. Matter of fact, if you look at 2023 right here, it was early 2023. I want to say like March timeframe. Let's see, April timeframe. That every time the market came into this level, it was actually time to buy in the market. So sorry, when the SKEW came into this level, it was time to buy in the market on the long side. Now, again, history, that was not true. It was when the market came to here that you wanted to be long, and when the SKEW came to here, you wanted to be looking to get short. But again, they are playing it in here and really throwing people off their game because it's hard to get extremely involved in the market when the SKEW is this high, right? And everybody else is looking at all their other indicators that they use and they're saying, man, this is more of a risk off situation, but the market keeps going up. So it's almost like the market knows that people are not going to press the gas here, and yet it keeps going up a lot like it did in 2021, right? So let's be ahead of the curve. And I hope I'm not wrong this time because I've been right for almost a year. But as long as we are getting closer to these levels here on the SKEW, it's right at that point where you start to feel a little bit more fear in the market, and it's due. I mean, it should be there. You should have fear, but they keep bidding up the market right when you start to feel fearful. Again, not like they used to. They used to like really make you feel the fear. Then they really turned on the fear. And when you didn't feel like doing a damn thing, then they shoot the market up. But again, if I haven't made it clear, these levels have worked for almost a year now. So possible relief bounce on the open. But if you don't take out pivot highs, expect the SKEW to come down here. Expect participants to get more on the put side. Expect the market to then, as soon as you start to feel very fearful, bounce the market at or around these 130 levels in the SKEW. Let's go ahead and move on. Fear and greed index, right? Let's take a look at this. What I find interesting is last week it was a 78. They dropped 1 point off of that move to the downside. Participants are saying, yeah, okay, yeah, I'm not scared yet, right? I'm staying greedy. So the market, this is implying that we are still greedy. there are still a lot of participants on the call side, and we're not buying your bluff. You see what I mean? Market's pulling back, maybe, but hey, every time you do this to me, you trick me. So I'm staying on the call side. That's what I see here. I was actually shocked to only see 1 point down. Man, people are extremely greedy right now. That's basically what that's saying. All right, so let's go over to the ES futures. Let's go ahead and minimize this. And as you can see on the ES futures, I'm going to walk through this with you really quick. There's not a ton of changes this week because to me there wasn't a whole lot of movement last week. I mean, yeah, if you bought the dip, which we had, some good times in the market last week, but also some things that didn't move. And it feels like one of those markets where if you're not picking the right names, and everybody knows, right? SMCI was awesome and LLY and like there's a couple other names, ARM. There's all these big moves, but a lot of what I'm getting the sentiment from a lot of traders, right? And I teach a lot of people, and I see out there on X is that you can come across different stories here and there where people either made a ton on SMCI or now I'm hearing a lot of people losing a lot of money on SMCI right at the top. There's always a winner, there's always a loser, but the majority of people were actually staying away from these type of names because one, it just didn't fit into their style of trading. Two, they're scared. It's like, man, that's really awesome, and I keep seeing it go up every day, but how do I buy an option that's worth, 35 bucks, right? Unless you're doing debit spreads and so forth. Very difficult to get involved with this type of name. So don't let it get under your skin because I could feel it because I have felt that as well. And I see it and it's like, oh, well, if I would have traded that, right? And it does feel like a market like that where a lot of names are really like kicking butt, but then the names that a lot of people are picking are kind of just not doing a whole lot. So, like, your leaders typically like Apple, Google, they look super bullish, but they're just consolidating right now. And that's the thing is like, if you look at the chart, they're surely not bearish. They're just consolidating after a big run. But when you look at SMCI and you look at Nvidia and you look at semiconductors, it's like, well, why can't my big names like Apple and those guys do anything? So just be patient, all right, and understand that there's a lot of synergy here and that it's just time to kind of consolidate. And consolidation leads to a lot of speculation. That's the issue. It really does. Because now you're like, well, do we go to all-time highs? Do we really get a big pullback? And what you find again is a lot of speculation. And if I'm in charge of the market selling you options and I can't sell options, this is the time that I'm thinking about doing it because I know that people are impatient. All right? But you got to take into consideration that the market it's healthy for things to digest. And that's what I really want to emphasize during this broad market analysis this week. Now, what I love, and I absolutely love this, I'm so excited because why? This has not happened in 15 weeks. We finally get our first inside candle. And a lot of my analysis is based off of inside candles. Example, the inside candle here would be coached to my team and all of you that we wait to see if we get it inside and up or inside and down. Inside and down formations lead us to demand, and inside and up formations in this case would lead us to all time highs. So, all you really need to do, and this is so straightforward, is I want you to identify your inside candle. All right. And we'll give it a little bit of room. It doesn't have to be perfect. So we're going to go right here and we're going to name this inside and up. Okay. IAU. And I have videos. And actually, I'm going to be speaking about this in Vegas. So we won't go big into this right now. But the inside and up formation. Okay. So I'm going to identify when price goes above this level, it would be an inside and up. And sorry about that. I need to put this right there. And then I want to identify when it would be an inside and down. So I'm going to name that, put it on the right, and boom, there it is. All right. And again, these are the levels. So as long as we're trading between 50.43 and 50.11, it's basically neutral. Now, I'm not saying we can't trade in here. We have a process for that on my smaller time frames, but the bigger picture is I want to know if we're creating inside and downs. I want to know if we're creating inside and ups. All right? Very, very important. If we go inside and down and we stay inside and down, you can guarantee that we'll be heading to a lower demand zone found on either the weekly time frame, which is way the hell down here, or on a smaller time frame. Again, that's why we coach on a daily basis. So, far as the weekly is concerned on the ES futures this week, that's all I care about. I already know where my support is. I have identified the 9 EMA. I have identified our trendy edges, and I've been showing you this every single week. So again, after 15 weeks, I'm finally getting a down candle that's inside, and now we'll know next week whether or not this went inside and up and down. Now, can I say something that I've been saying for a couple weeks now, and I like to share it with everybody here on YouTube? This is absolutely crazy, and I am a bit superstitious, like I think a lot of people are, but this is where I spoke at the last money show, and I called the bottom. And I find it very ironic that I'm catching a plane on Tuesday to head to the money show in Vegas. Is this where we call the top? Oh my. This is coincidental. Like I just can't make this stuff up, and I've been saying this for a very long time that perhaps I get to fly right when major changes are happening in the market. This is really cool. All right. So, anyways, we'll talk more about that a little bit later in the week. Should be fun. Moving on over to the day. This is going to be your levels. Now, far as the ES futures, I am not changing the levels this week. The buy triggers are going to stay the same. Your resistance is going to stay the same, and your short trigger is up here. This is what I have for the dailies. It worked perfect last week. This is where you wanted it to be long. You can see that price pushed up into resistance again and then broke down. I'm going to leave them here because, again, there's a possibility we're just going to chop. Again, if we get above the high, you guys know, then cool. All right. However, if we don't break down below the low, this is basically where I'm looking for the market to chop around in. On the 4 hour, biggest change here, remember all these green zones we have identified every week, and they've been there for quite some time, and they are working like magic. But the difference this week is now you have a red box on the chart, and it's been a long time since we created a red zone. So we have a supply zone. However, I want to point out that, and we talked extensively about this on Friday, is this supply zone is not like a big supply zone. Okay. It's not much to be concerned about. So it could happen that we just break right through it and we break that new pivot that I talked about, or that past pivot. All right. Please understand that. This is not a significant supply zone. We won't know that. It will become one if for some reason we follow through and you start to get sell offs like this, then we'll have a lot of supply overhead going into the next quarter. Okay. So, again, that's what I'm seeing right now. We have a supply zone. It's not significant at the time, but please understand this is resistance until proven otherwise. This zone down below here, notice it worked really well for our last buy. Notice that it's not fresh anymore. What does that mean? It just basically means what I'll be looking for going into this week is if we come back to the zone, I want to at least try to go long on this pullback into this yellow level here, which is at around 49.50. And I would be basically trying to do that off the idea that the market stays strong and we're just going to make a higher low and trade within this range like we're talking about. If for some reason we were to gap down big or something like that and take out this low, then what I just said doesn't matter. Then we're looking for the fresh trendy zone, which is down here around 49.04 to 48.49. Let's go ahead and move into the NASDAQ. And let's head over here into the weekly. Same thing. I've already identified this. I just wanted to go over it on the ES, how to identify. We have our inside and up above 18,047 and inside and down. Let me see here. Yeah, below 17,716. And again, inside, it's been a long time. We had an inside candle here, guys. What I mean when I said inside, this is the second one that's happened, but this is more of a inside on the way down, if you will. That's what's important here, just like the ES. Nothing else is going to change. The 9 EMA support is here. There's a lot of confluence within the support zone. We have, it's kind of hard to see here, but we have a lower purple edge here and a blue one here. The question is, once we get here, do you get a significant bounce off the 9, or are we looking for more buyers at more confluence down here towards 16,473? Both are pretty far away, just to understand where the levels are. Overall, if we were to come back into this area, I definitely expect buyers in here. The question is whether it's at the top of the range or the bottom of the range. Okay, I would take my shot at both with stops and try to see if I can buy that dip, if you will. All right, moving on. This is going to be the daily. I did change these up a tad. So please take note of these. Your short trigger is 18,063, resistance 17,916, trigger long 17,625, and then down here trigger long 17,349. And again, ours from last week worked really well. Came into the trendy edges. Nasdaq bid it up. It did not make higher highs. And again, just want to make sure I reference this over and over. Lower highs, because I do not want you to forget, in order for us to really make a change bulls going into this week, we have to build value above this pivot high. If not, I expect range to chop between these colored, if you will, all through here. Okay. That's where I'd expect the chop to consolidate. All right, let's go ahead and move on to the 4. Now, please, with the arrows, I'm just showing you what could happen. I'm not saying this is going to happen, but this is a zone that has been tested just like the ES futures. So what we would expect, again, this is off the notion that we make a higher low and we come into a trendy edge. We find a bounce. This is basically where I'm stopping right here at this resistance. If I were to measure from here to here with Fibonacci's, this is your 50 or your median line. And I would expect resistance there. So as price popped, we'd come back around. We test this again, maybe get a bounce in here, but then we head down into the fresh zone. So that would be like max pain, if you will, for the bulls, is that you get this false little, hope, if you will, and then we break down. And once again, on the 4-hour chart, the difference between the NAS and the ES is the NAS has led underneath the cloud. So it's showing you what could be something that we see in the ES this week. So please pay attention to that as well. Okay, so again, these are your levels, just like the ES. We built some supply up here. And that pretty much concludes what I wanted to talk about on today's broad market analysis. As always, thank you so much for your support. And again, I welcome any kind of feedback or anything that you would like to talk about. Please ask questions here on X or here in the room at Simpler Trading. It's my pleasure to do that broad market analysis with you. Have an amazing day.